Hi, everyone. Welcome to the latest in Navatar's regular series on deal origination best practices. Today's topic is how to win deals in an uncertain Europe. I'm Navatar's Nick Donato, and I'll be your moderator today. Very shortly, I'm going to introduce you to Ulrich Schneider, who is our expert on EU deal origination. To provide you some background on what led to today's webinar, let me share with you that Navatar recently had a conversation with Ulrich about market perceptions. Specifically, Ulrich, who is based in Germany, said that he regularly reads U.S. financial newspapers, and he told me that the headlines he was seeing didn't exactly fit the reality on the ground in Europe. I was pretty intrigued by this and had a sense for what he meant, but to hammer home the point, I want to share with you a handful of those headlines that I gathered in advance, and these are all just from the past few months. Turbulence and uncertainty for the market after Brexit, New York Times. Markets worry as Italian banks face the perfect storm, CNBC. European markets are bracing for a wave of contagion from Greece, Reuters. And this is all pretty scary stuff, right? Well, not necessarily. As Ulrich is going to lay out for us very momentarily, the facts on the ground are less doom and gloom, and Europe, which is the world's largest economy, is still a very busy place for M&A activity. But there's one key distinction to make here, and it's that this M&A activity is being completed by who Ulrich describes as insiders, which of course means that there are. So who are insiders and outsiders when it comes to winning deals in Europe? Well, outsiders are buyers who sit on the sidelines, and they're waiting for a break from the EU turmoil, mostly at the sacrifice of higher returns. Outsiders are those who feel spooked by the headlines, and so they continue to stockpile cash reserves and dry powder instead of seeing Europe more accurately as a place where plenty of deals are still to be had. Insiders, in comparison, are first and foremost risk managers. They don't necessarily have to be based in Europe, but they use their local expertise and they use their market knowledge to win deals that are being undervalued by outsiders. Navatar, of course, looks to help clients be insiders. We fit into the picture as a cloud services provider that helps prep and corporate strategics and M&A advisors like Ulrich formalize and automate the deal origination and deal execution process. Later on in the webinar, we plan to show you how Ulrich uses Navatar to execute some of the deal origination strategies that he's planning to share with us in just a bit. And we've also reserved time for Ulrich to field your questions. Just use the GoToWebinar widget on your screen there to submit your inquiries. And while I'm in housekeeping mode here, allow me to say that a recording of this webinar will be emailed after the presentation, so look for that in your inbox. Now, without further ado, allow me to introduce you to today's star, Ulrich Schneider. He is a partner with Proventis Partners. Ulrich is a veteran M&A advisor based in Germany. He takes care of both national and international M&A projects, as well as growth and acquisition financing, which I would say provides him a pretty unique and wide vantage point of the EU M&A landscape. So Ulrich, with that background on you, can you provide us the background on Proventis Partners to kick things off for us here?
Sure, Nick. Yes, thanks for having me on this webinar. I hope I can provide some interesting insights to the audience. I work at Proventis Partners. We are a consulting company focused on advising private equity investors and corporates on M&A transactions and corporate finance projects, both on a local, European-wide, and a global scale. From our offices in Hamburg, Munich, and Zurich, our team of about 25 professionals has supported our clients in over 200 projects. And we are active across of sectors, including industrials, services, consumer and retail, as well as the times sectors. My focus is mostly on international M&A transactions in the industrial and consumer goods sectors. If we jump to the first slide here, I picked up a new point, Nick, where I basically put out some keywords, some headlines that are in the news today. So let's discuss a little bit a few current concerns before we get on how to actually win deals. When you open your newspaper, as you said, Nick, you can't really help but think that Europe is in dire straits. And I don't want to go into detail on every aspect, But from an M&A point of view, the situation is just not as dark as many suggest. A lot of these items, a lot of these headlines in the news, like the NATO versus Russia or turmoil in Turkey, the refugee crisis, are mostly political in nature. And of course, these, if they escalate, will certainly have economic effects in the end, but it would really have to escalate a lot to really feel it also in the economic point of view. One of the biggest headlines in 2016 was an economic issue, which was the Brexit. And while the outcome of the referendum shocked most people, I actually believe that the effects on M&A activity will be much less negative than suggested. One of the reasons is that many corporations who are currently active in the UK will need to look at selling some of the assets to reduce their UK exposure. At the same time, these or other investors, when they look at Europe, they will look more at continental Europe to retain their exposure. And a depreciation of the pound and the euro will certainly lead to reduced valuations for European companies as a whole and make them more attractive for global investors. I'll get to this in a second, but strong economies like Germany or Scandinavia, which would definitely continue to see deal flow in the months and years going out. One of the factors is that Chinese appetite for industrial targets continues to be very strong, and I'll also get into this in a second. Now, we talked about the current concerns. Let's take a quick look at the data, because the data also shows that cross-border M&A deals in Europe have continued to grow over the past quarters. What you can see on this chart is the European cross-border transactions involving European M&A targets, and you can see that the trend has been up for several years. We've seen some decline in the 2 quarters leading up to the UK referendum, where a lot of people were really in waiting mode, but the second quarter already saw a jump again in activity. And what we can also see is that the share of global investors who invested from around the world into European companies has remained largely stable, and the share has recently risen again, indicating the continued interest of global investors who actually don't appear that frightened. Among these global investors, North America still has the largest share, with over 500 deals done in the first half of 2016. Investors from Asia Pacific have acquired about 230 companies, but this number is actually triple that level of 2013. So you can really see a growing interest of among Asian companies looking at Europe. Next, let's take a look at the M&A development in the key countries in Europe. Now you can see that the UK saw a drop in M&A activity, also driven by the Brexit referendum, but also here Q2 already saw a considerable recovery. For investors that are looking for attractive assets outside the UK, Germany is clearly the place to be. As mentioned earlier, many corporations are likely looking for a new European base, and Germany offers political and economic stability and many innovative companies of all size clusters. The surge in German cross-border transactions in 2016 is also driven by strong interest of global investors in German industrial companies. Especially China has done more than 20 acquisitions in the first half of 2016. Examples, for example, we have the acquisition of robotics manufacturer KUKA by Chinese Midea Corporation, a mid-market company, aerospace supplier Brötche by Shanghai Electric, or the sale of Kraus Maffei, a specialty machinery manufacturer, to ChemChina, a state-owned company, which, by the way, is currently in the midst of acquiring the Swiss agricultural company Syngenta for $43 million. So you can see, especially from China, but also from Japan and other Asian markets, there's a lot of interest in industrial companies. Other sectors that we're seeing a lot of M&A activity in Europe from global investors is IT, and especially software and software services and consumer goods. So we talked about Europe being a scary place from the outside, but in fact the insiders, they know better about the state, and deal flow actually remains very strong. Let's take a quick look why I believe it makes sense to continue the pursuit of excellent targets, and then what to look out for in order to win deals. As mentioned before, and evidenced by the active M&A market in industrials, the opportunity to acquire attractive technologies play a major role in current deal flow. Chinese investors are, for example, looking to gain access to cutting-edge technology from leading European companies in order to adapt this technology to its home market. Both technology leaders and also what we call hidden champions are home to some very talented engineers and workers, and this know-how can also be transferred by acquiring a company in the sector. A lot of companies look at diversifying internationally to gain access to new customer markets and the corresponding sales and distribution organizations. This is something that we see particularly true for the consumer goods market in Europe. And finally, diversifying geographically is also a very important driver for companies. So if you decide to pursue international M&A opportunities, let's talk about how to source and execute these transactions in Europe. What investors need to understand is that cross-border M&A processes are generic only on the surface. They are rather affected significantly by the individual local circumstances. We have cultural differences, we have political, economic environment, and then we have legal and financial regulations. The broadest and most significant factor that international investors need to consider is the cultural environment, because it affects all the other factors significantly. And Europe itself is very diverse. It's evidenced by various languages. For example, you cannot expect that owners and managers of mid-market companies, which might have excellent products or technologies, are sufficiently proficient in English to execute a M&A project in English. So it should be considered that at least an initial approach is conducted in the native languages, because this shows consideration of the local circumstances, and it really opens a lot of doors. What you have to take into account is local customs as well. We had an M&A process stall for several weeks because we were working with a French target and we couldn't get any work done because it was summer vacation and nearly the whole month of August was idle. Culturally, there still exists a clear bias towards international investors. Especially at the lower end of the market, we have a lot of owner-managed companies and less professional counterparts. There is still a strong stereotype of a typical Anglo-Saxon investment banker approaching a European company. Of course, you also have to take into account sometimes significant legal specialties. Another example that we had when we were selling a company which had a French subsidiary was that you are legally obliged to inform your workers' council in France that there would be a transaction, which is of course something that you do not want to do in the first place, because you want to keep the employees in the dark for as long as possible. However, it is a criminal offense not to inform the Workers' Council, and this is something that we had to take into account and the buyer had to take into account as well in the process. The tax laws are different in different countries. One issue that we all often have when we talk about asset deals with international investors is that they have to deal with property taxes, which are due if you acquire more than 95% of a German asset. So these are some examples that really show that there are so many different aspects that need to be taken into account. So let me provide you some thoughts on how you can be more successful in creating M&A opportunities in Europe. First of all, you need to develop a clear understanding of why you want to find a company internationally, what it brings to you. Think of what the ideal target would look like, what the environment needs to be for a successful deal, and how you can best structure your transaction. You need to have your eyes and ears on the ground very early. You should try to understand the industry leaders, the deal makers, know the intermediaries to be able to look for proprietary deals rather than waiting for very competitive auctions to take place. You need to understand the cultural aspects of the market and try to create rapport with your targets to be successful not only in the sourcing and execution, but also in the integration of acquired companies and its employees. The sellers need to understand that you are the ideal partner for them and how you and your company can really benefit the sellers and their companies. It's very important to work with local partners who understand the local customs, who understand the laws and financial regulations, rather than to just look outside in and work with external advisors. And you have to be ready to invest in the transaction process as well. We find that cross-border transactions require significantly more time and especially more resources in order to execute them. Now, these advices might seem very simplistic compared to a lot of technical issues that we could discuss, but they are very crucial to succeed. We often see international M&A transactions fail, not due to technical issues or financial discord, but rather due to cultural incompatibility and disregard of the local environment. So in this way, a very structured approach to managing all these factors is very crucial in my opinion. And discussed with Nick how we as a Navatar customer use the tool in these environments. And for us, it is very important to manage a large network of partners and intermediaries, to always know who is the right expert in a particular country, in a particular industry to talk to, and also when we manage a transaction and execute it, who are the people that we talk to, who are the companies that we saw, and how to manage, and in order to manage a process very efficiently.
Thanks, Ulrich. And you're right. Something that we wanted to add to this presentation is the role that technology plays in helping with the EU deal origination process. So we heard Ulrich say that deal sourcing in Europe requires structure, that requires discipline. So what does that mean in detail? And for us at Navatar, it means taking a systematic approach to tracking all the different touch points that you're going to have with sellers. It means creating a target list so that you can reach sellers more effectively. It means that across offices, so when you're working on a cross-border transaction, you have firm-wide visibility into where the deals are being generated or at what stage in the investment process they are at. Without that, you lose communication and collaboration abilities. So I want to show you what that looks like visually, and keep in mind the points that Ulrich had made throughout the presentation. We have Navatar's Kate and Kenkar here. Kate, can you provide us a visual on what this structure and discipline looks like?
Thanks, Nick. Yeah, happy to provide that. I will switch screens. And actually, I was thinking, given the topic that we covered today and the focus on kind of process and the need to have a structure, it'll be interesting to see how both the M&A firms as well as the investors or the buyers, right, the private equity, financial sponsors, or the corporate buyers are using uh, the systems to track these processes. So first, we'll start with on the M&A side. Right? So if you are an investment bank, which is facilitating these these transactions, it's important, as Ulrich mentioned, to have profiles, to have intelligence, to be able to coordinate and create a structured process. And the system helps in creating kind of a unified approach with all the parties. So if you're doing sell side deals and you're working with buyers, in this example like Bain Capital, and if you have multiple offices in Europe, you want to make sure you're coordinated. And allowing or having a system like Navatar allows you to be able to see all the different discussions your team is having with different people with these buyers. You can also use that intelligence to build a profile of the buyer so you can understand what typically they like to invest in, what kind of strategies, what's kind of their investment criteria. And the reason to do that is that you can now intelligently target these buyers when you get the right deal. So you when you have a deal, and let's take an example of a deal, you typically don't want to just blast it out to your entire network. Right? You want to be selective because at the end it's also your brand perception. So you want to target the right buyers. So if I have a specific deal that I feel is in a specific sector or working on or maybe in a specific area, I should be able to leverage the intelligence that I have. And it could be as simple as looking at another similar deal that I had done. Right? So I can look at a similar deal and I should be able to quickly leverage all the buyers that we had reached out to for that previous deal and make them my target list. So these are just some examples to illustrate that having a profile, combining all the information, and then using, and that's the most important thing, using that information to effectively and efficiently reach out to the right buyers is becomes important. Uh, Now, what is also happening as you do that is you get to build a whole history with each buyer, so you can see all the different deals that you worked with that particular buyer on. Now, one thing to keep in mind, and we have this unique insight because we serve both the uh, M&A firms as well as private equity and strategic buyers, is just like from an M&A perspective, you keeping track of your buyers and all the deals that you're showing to them. Keep in mind, they are also keeping track of what you are bringing to them. And just to illustrate that point, let me switch into the view of a private equity firm. So if I'm a private equity firm, I'm kind of working with multiple buyers, with multiple M&A bankers. I am keeping track of all of them, and the sourcing dashboard allows me to do that. So it's not just the fact that I can look at what deals are put. I can actually rank and draw a scorecard on all my bankers. So I can see who's bringing me what deals. I can also set up processes to continue to cultivate these relationships so that we're reaching out to these banker contacts on a periodic basis. So they are tracking all the bankers, all the deals that the bankers are bringing in. And if you go to a specific banker profile, they are able to see all the different deals that any given banker would have shown them. Right. So keep in mind as you're kind of this is a business where both these counterparties work closely with each other, and what our system is allowing you to do is create a structure, create a process so that you can make it both more meaningful as well as better targeted. Nick, I'll hand it over back to you.
Thanks for that, Kane. I think that the big takeaway there clearly is to ensure that whatever your deal origination strategy is, that you have a formalized process for what you're doing. I want to kick this over to audience questions. We've got a few coming in. The first, Will from New York. He wants to ask Ulrich, are Chinese bidders approaching the M&A process any differently than Western buyers? Ulrich?
Yes, they indeed are. What we see when we work on deals involving Chinese buyers, we see that the process is usually a bit more complicated than with American or other European bidders. This in terms is attributed to the fact that Chinese companies are still bound a lot to different regulations. For example, payments, they still have to be authorized by special authorities still, so they can actually take up a long time. However, Chinese investors are, as I mentioned before, very eager to gain a foot into Europe, and they are willing to bid quite high prices. And this is driven by two main reasons. One is they have the potential for significant synergies if they have a technology and can implement it into in China with over 1 billion people living there. And the other factor is that there's a real IPO culture in China. So they are actually willing to pay valuations which are oriented more at public companies and private companies. Because what they are trying to do is build up big companies, bring them to the stock exchange, and so they are very competitive in the price issue, but it really takes more effort and more time to deal with them.
You know, that's an interesting point. Is it getting to be the case that Chinese bidders are driving valuations up so far north that it's causing traditional Western buyers to sit on the sidelines, or is it just creating more overall activity in the European M&A market?
I think it's creating more activity. It truly puts up the pressure on European companies. But for many companies, you know, there's always the trade-off between, do I want the highest bidder, or do I want high deal security? Do I want a smooth process and a very reliable partner? So it's not really that there is more activity and there is definitely more competition. But if you are an insider, as I mentioned before, and you really know the market and you know where you can add value, you will still be in a good position.
And has it been the case that, let's say, a majority of sellers have valued those cultural values, have valued the approach, the chemistry between buyer and seller over, at the end of the day, having a higher bid for your company from, say, a Chinese bidder that may be less familiar with your company, with your market?
It really depends. If you're a very professional shareholder, like a private equity fund or a publicly listed company or a larger group, you're much less emotional, and you're really looking for you're still looking for a trade-off, but I would believe price is a bigger argument here than if you're a smaller company. There might be some cultural biases and also a better fit, which is often perceived. So there really has to be a big premium for example, Chinese investors to convince them to sell to them.
We have a few more questions on this China topic. Monique in London wants to know that you had mentioned that Chinese companies are targeting the tech sector in Europe as a way to adopt their technology for their own markets. Does this create concern? I imagine this touches on some of the political factors that we went through. May a European seller feel more comfortable selling to a Western bidder because they know that, say, it will be an easier time going through the regulatory approvals. There's less political concern over an American company buying your assets as opposed to a Chinese bidder. Would you agree with that?
Well, if you're looking at civil applications, I mean, there is the issue of some regulatory approval required, but it's mostly competition related. I think from that point of view, if you see how much, for example, European companies are actually investing in China themselves, if you look at Airbus building a whole aircraft factory there, or other companies, I don't think this is an issue anymore. At least in the civil sector, in the military sector, it's of course a different issue.
We have a question. This is an interesting one. Sandra from Boston wants to know, what is a cultural quirk that a first-time buyer might want to know before entering Germany for the first time? So we're talking about your whole market here, Ulrich.
Well, one is the language issue that I mentioned before. You have a lot of very excellent companies, hidden champions. They are very good in a niche. They might even have international exposure, but then you talk to the owner and they don't speak any English. And this is really an issue for many mid-market companies, which might be surprising in this day and time. So this is something that you have to really understand. And another issue is, again, if you talk about smaller companies, you know, these financial concepts that we always discuss with our partners or with potential buyers, like how you get from an enterprise valuation to the equity valuation, to convey this to the clients is sometimes very difficult. That you actually have to tell them that the money from the bank does not belong to them, but it's actually the money for the bank. So you really have to do your homework, and I think it's always good to have the right advisors on board who know these potential little pitfalls that you can have, which might sour the mood a little bit.
And there are many of them. We have time for one final question. David, another New York attendee. I say this one for last intentionally because it's pretty interesting. He asks, there seems to be a sense that European M&A activity will rebound in the second half of the year. Ulrich, do you agree with that?
Yes, we are already seeing it in the data. If we're looking at the figures for July, August, and then the 1st of September, there's a lot of activity going on, both nationally and on a cross-border scale. We are seeing it in our own work. Most of our projects are currently driven by international investors. We're very keen in investing in Germany. So I don't, and also in this point of view, appears to be no slowdown in the credit markets. Everybody tries to keep the level up, so we see no slowdown at this point.
So you'll see on that final slide that we have up there a list of contacts you can reach out to for any follow-up questions, or in our case, a product demo of any of the solutions that you've heard about today. Please also reach out to me if you wish to share your own thought leadership on deal origination. We're always looking for speakers with something new and interesting to say to the market. As mentioned at the start of the webinar, a recording of today's presentation will be sent to all attendees in the coming days. I want to thank Ulrich Schneider from Proventis Partners for joining us today. On behalf of Navatar, I'm Nick Donato. Enjoy the rest of your day.
Thank you.